So we've seen all the thumbnails, more specifically Alex Hormozi and his video where it's titled Get Rich in the AI Revolution, and a bunch of knockoff videos that you've seen thereafter. The TLDR of that video is basically artificial intelligence has become readily accessible with a tool called ChatGPT, and in turn has created millions of different ways to get rich. So I asked ChatGPT for 5 different dividend ETFs to invest in, and while I was expecting a totally out-of-date answer, the answer that it gave me was pretty surprising. And for those of you out there that don't know what ChatGPT is all about, it's a machine learning artificial intelligence that was created by OpenAI that can essentially answer any question on planet Earth. So I asked it to give me 5 different dividend ETFs to invest in, and here are its answers. And before we start, I just want to remind you guys that this list is in no particular order. The first dividend ETF that ChatGPT recommends me to invest in is the Vanguard High Dividend Yield Index Fund, or VYM in short. VYM seeks to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. VYM is currently trading at $110.77 with an extremely low expense ratio of 0.06%, meaning for every $10,000 that you invest into this dividend ETF, you'll be paying just $6 on things like general upkeep, management, and fees. And pulling up their max chart, it has doubled in value since its inception in 2006, 16 years ago, meaning that if you were to have invested $10,000 into this ETF 10 years ago, that $10,000 nest egg would have turned into a $20,000 nest egg today. Taking a look at its performances over the past 16 years, it currently has a 0.67% year-to-date daily total return, negative 1.45% one-year daily total return, and 8.73% for its 3-year daily total return. And taking a look at VYM's annual total return history, VYM had only 2 years since its inception where it entered bear territory, and those years were in 2018 and 2008. Other than that, it's had consistent increases about 10% every single year. On top of its growth every single year, VYM also has a pretty decent dividend yield of 2.84%. So again, for every $10,000 that you invest into VYM every single year, you'll be getting roughly around $284 in dividend yields every single year, or about $24 every single month. Out of the 441 companies that it currently holds, within its top 10 are companies that everyone has heard of, such as Johnson & Johnson, the family company, ExxonMobil, the oil giant, and JP Morgan and Chase. VYM encompasses most sectors, but the top 3 sectors that it holds currently are with financials at 20%, healthcare at 15%, and consumer staples at 12.7%, and has a total net asset valued at just a little over $65 billion. I personally don't think that I would invest in a VYM. I think that although it's a great dividend ETF all around, its dividend yield is a little lower than I expected, and looking at its max chart, I would argue that this dividend ETF has underperformed over the years. On top of that, if you take a look at VIG, I feel like it's beat VYM in basically every notable metric. And taking a look at VIG's entire stock chart timeline, you can see that VIG has increased 300 to 400% since its inception in 2006. Honestly, not a fan of ChatGPT's first pick, but let's see what the other 4 picks are. The second dividend ETF that ChatGPT recommends me to invest in is the iShares Select Dividend ETF, or DVY in short. DVY seeks to track the investment results of an index composed of relatively high dividend paying US equities. DVY is currently trading at $123.96 with an expense ratio of 0.38%, meaning for every $10,000 that you invest into this dividend ETF, you would be paying roughly $38 in things like general upkeep, management, and marketing. This dividend ETF's expense ratio is a little higher than I would have liked it. Generally, we're looking for an expense ratio that's under 0.5%, so DVY is still in the clear, but we want it to be a little lower than that. And pulling up their max chart, has nearly quadrupled in value since the housing market crash of 2008, 13 years ago, meaning that if you were to have invested $10,000 into this ETF 13 years ago, that $10,000 nest egg would have turned into a almost $40,000 nest egg today. And taking a look at its performances over the past 19 years, it currently has a negative 1.03% year-to-date daily total return, 1% one-year daily total return, and 9% for its 3-year daily total return. And taking a look at DVY's annual total return history, DVY has had multiple years since its inception where it's entered bear territory, and those years were in 2007, 2008, 2015, 2018, and 2020. Looking at these metrics, I'm hoping that most people invested into this ETF in 2009. If that's the case, then you'd be seeing nearly 600% in returns in the past 13 years. DVY also has a pretty decent dividend yield of 3.14%. So again, for every $10,000 that you invest into DVY, you'll be roughly getting $314 in dividend yields annually, or roughly $27 monthly. Out of the 104 companies that it currently holds, within its top 10 are companies that everyone has heard of, such as Gilead Sciences Incorporated, Altria Group Incorporated, and Philip Morris International. DVY encompasses most sectors, but the top 3 sectors that it currently holds are with utilities at 25.89%, financials at 21%, and consumer staples at 10.66%, and has a total net asset valued at just a little over $23 billion. The housing market crash of 2008 was a terrible time for any type of investor, beginner or pro, but once 2009 rolled around and the market bottomed out, DVY has made nearly 600% in returns in that time. Plus, with a relatively decent dividend yield, this dividend ETF is not bad at all. The third dividend ETF that ChatGPT recommends me to invest in is the Schwab US Dividend Equity ETF, or SCHD in short. SCHD's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. Currently trading at $77.63, the fund can serve as part of the core or complement in a diversified portfolio and invest in stocks selected for fundamental strength relative to their peers based on financial ratios. SCHD is currently trading at $77.63 with an extremely low expense ratio of 0.06%, meaning for every $10,000 that you invest into this dividend ETF, you'll be paying just $6 on things like general upkeep, management, and marketing. And pulling up their max chart, it has tripled in value since its inception in 2011, 11 years ago, meaning that if you were to have invested $10,000 into this ETF 11 years ago, that $10,000 nest egg would have turned into a $30,000 nest egg. Taking a look at its performances over the past 11 years, it currently has a negative 2.64% year-to-date daily total return, 1.62% one-year daily total return, and 14% for its 3-year daily total return. And taking a look at SCHD's annual total return history, SCHD had only 2 years since its inception where it entered bear territory, and those years were in 2018 and 2015. Other than that, it's had consistent increases of over 20% every single year, making it one of the strongest dividend ETFs on the market today. On top of its high growth every single year, SCHD also has a pretty decent dividend yield of 3.36%. So again, for every $10,000 you invest into SCHD, you'll get roughly $336 in dividend yields annually, or $28 monthly. Out of the 103 companies that it currently holds, within its top 10 are companies that everyone has heard of, such as Merck & Company, the pharmaceutical company, Home Depot, the home improvement retail corporation, or Pepsi, the beverage brand. SCHD encompasses most sectors, but the top 3 sectors that it currently holds are with information technology at 21%, financials at 20%, and consumer staples with 14%, and has a total net asset valued at just a little over $44 billion. I personally think that SCHD is a phenomenal choice that ChatGPT has recommended. I know that people go absolutely ballistic every single time this ETF is mentioned, especially in the subreddit group r/dividends. Definitely highly recommend personally investing into SCHD if you haven't already. The fourth dividend ETF that ChatGPT recommends me to invest in is the ProShares S&P 500 Dividend Aristocrats ETF, or NOBL in short. NOBL is the only ETF focusing exclusively on the S&P 500 Dividend Aristocrats. High quality companies that have not just paid dividends but grown them for at least 25 consecutive years, with most doing so for 40 years or more. NOBL is currently trading at $91.91 and has an expense ratio of 35%. NOBL has over $11 billion in net assets with a price to earnings ratio of 19.19 and a price to booking ratio of 3.77. Taking a look at NOBL's max chart, if you were to have invested $10,000 into NOBL when it was first created in 2013, you would have had a comfortable sized nest egg valued at $28,000 in 2023. On top of that, pulling up NOBL's historic performances over the past years, it has a 1.23% YTD daily total return, although it's been literally 11 days into the year. It has a negative 5.8% one-year daily total return and a 8.97% 3-year daily total return, and has only recorded 1 year since its inception where it entered bear territory, and like most ETFs, that was in 2018. NOBL only holds 64 companies, and its assets are pretty evenly divvied up amongst these companies. And within its top 3 are Albemarle Corporation at 2%, Cardinal Health Incorporated at 2.01%, and Archer Daniels Midland Company at 1.87%. NOBL holds companies in all sectors, but the top 3 biggest sectors it currently holds are consumer staples at 21%, industrials at 18%, and materials at 12.75%, and has an extremely confusing low dividend ETF of 1.88%. Alright, so a couple of things stand out for me with this dividend ETF. The first being it only holds 64 companies. One of the appeals into investing in ETFs in the first place is their nationwide coverage of a multitude of different sectors and stocks. The second is that it has a below average dividend yield of 1.88%. At that point, I'd rather invest my money into SPY. And for those of you out there that don't know what a dividend aristocrat is, like I said previously in NOBL's introductions, a dividend aristocrat is a company that has consistently paid out dividends for at least 25 consecutive years and have also increased those dividend percentages over the years as well. Dividend aristocrat kings include companies like Coca-Cola, ExxonMobil, and ABV VIE. And the final dividend ETF that ChatGPT recommends me to invest in is the Invesco Dividend Achievers ETF, or PFM in short. PFM seeks to replicate before fees and expenses the NASDAQ US Broad Dividend Achievers Index, which is designed to identify a diversified group of dividend-paying common stocks that comprise the index. The companies within have increased their annual dividend for 10 or more consecutive fiscal years, and PFM is reconstituted annually in March and rebalanced quarterly. PFM currently trades at $37.13 and has a above average expense ratio of 0.52%, meaning for every $10,000 that you invest into this dividend ETF, you'll pay $52 in things like general upkeep, fees, marketing, and management. Pulling up their historical performances, PFM has a 0.44% year-to-date daily total return, a negative 6.29% one-year daily total return, and a 8.35% 3-year daily total return. And aside from the housing market crash of 2008, has only had 2 years since then where it slightly entered bear territory, and those years were in 2015 and 2018. Pulling up PFM's max stock chart, if you were to have invested into PFM since its inception in 2013, a $10,000 nest egg would have grown into a $28,000 nest egg in 2023. PFM's price to earning ratio and price to book ratio are 18.33 and 3.97 respectively, and clocks in a relatively low dividend yield of 1.93%. With that all being said, having an above average expense ratio of 0.52% and a below average dividend yield of 1.92%, it effectively means you'll be only earning about 1.4% in dividend yields every single year. Competitively speaking, there are a ton of different dividend ETFs out there that you could be investing in besides this one. Alright, what do you think about ChatGPT's recommendations? Are these dividend ETFs some of the ETFs that you personally invest in? For me personally, aside from SCHD and maybe DVY, these are the dividend ETFs that I personally wouldn't invest in. I definitely think that ChatGPT played it a little too safe. I definitely sprinkle in a little bit of DHS, JEPI, or JEPQ just to increase my overall dividend yield. Let me know what your opinions are about ChatGPT and its capabilities. It's definitely a super interesting tool to have. Also, it had this disclaimer at the bottom once it was done answering my question, to which I thought it was pretty interesting. ChatGPT is basically saying, here's your answer, but this is not financial advice. Those of you out there that are new to the channel, hi, my name is Eric. I generally talk about everything credit card related, but more recently I've been making videos on broader financial topics, such as these videos right here. The main goal for this channel is to provide informational and meaningful financial related content that everybody everywhere can enjoy. So again, if you'd like to support that dream, make sure to hit that subscribe button. And with that, thank you for watching as always. Until next time everybody, stay safe out there. Peace.